Okay, I want to get back to business because the third quarter GDP was revised down to 2.2%. We just saw that a few moments ago. That was worse than expected. My next guest says we have to focus, though, on the fourth quarter and beyond. He's Nariman Behravesh. He's the chief economist at IHS Global Insight and joins us from Lexington, Massachusetts. Nariman, great to see you again.
Thank you, Betty.
Okay, so before we move to the fourth quarter, though, I want to get your reaction on this tough revision for the third quarter.
It was, and in fact, we were below the consensus. We thought it'd only be 2.5. It came even lower than we thought. Most of it is that inventories were drawn down more than what people thought, and non-residential construction still a big drag on the economy. So you've got some trouble spots in the economy, especially that non-residential sector. So it's not a surprise that this recovery's kind of slow in getting going. I think that early reading, as you were saying earlier, was really overstated the strength of the economy.
Right. Some might say that GDP tends to overstate in the first place, given the calculations. But OK, then what does all of that tell you, though, about the fourth quarter, Nariman?
Well, the good news is actually that the fourth quarter is going to be stronger, we think, around 4%. And the reason is inventories are now so lean that businesses are going to actually start rebuilding inventories. The other piece of good news is trade is coming in very strong. Rest of the world's recovering. We're exporting a lot. So this is all very good news. So we think 4% for the fourth quarter we're in right now.
I mean, that's certainly good news for the economy, but I'm looking at your predictions for 2010, and you still say that there's a high risk of a W-shaped recovery, a hard W-shaped recovery.
That's right. And the reason is we're not out of the woods. It's always possible consumers will react badly to the high unemployment rates and pull back more than they have already. There's always the possibility of the next leg in the financial crisis. In the U.S., it's the commercial real estate sector. Still problems out there. In Europe, it's the potential for sovereign defaults. So we've still got a number of risks out there. Could come back to haunt us. We think it's only about a 20% probability kind of scenario of a hard W, but it's still uncomfortably high.
Yeah, 20% is still, I mean, you'd rather it be be nothing at this point. So what's the other 80% then in your view?
Well, 60% is what we call our baseline, which is a slow recovery. What I often will say, a recovery that doesn't quite feel like a recovery, 2.5%. But there's an upside 20%, which is that you could start to see that pent-up demand in the economy, people holding back. You could see that released much more powerfully, and so we could see stronger growth, 3.5%. So I think the risks are right now somewhat balanced, actually.